Okay, we are live both sides. Good evening, my people. Good evening. Good evening. Ah, good evening. Good evening. Good evening. Good evening. Good evening. So today, uh, we are back again. We are back again with a new one. So the idea is to analyze and even go live. Analyze and even take live trades with you. That's the idea. Is to be able to take live trades with you during this New York session. New York session has already started. We are a bit late, but I believe we can just get to catch the move on gold. So yeah, I'll really love to see us getting in and out. 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 Yeah. So I'm still getting things down this side before I can start analyzing. Oh, we are good. So New York has already started, like I said, and first thing is first, we start with what I always teach my students. So the first thing that I always teach my students before you can just take a trade is to look for where is currently the market trading at. Where is the market at this particular time? Before we can just say, you know what, let's hit a buy button, let's hit a sell button. What is currently the market doing? What is currently the market doing? So looking at gold now, we can see that there is a huge struggle for gold to do what, to buy, and also for it to go down. And what are the reasons behind that kind of movement? So first thing, we look for the closest external high and external low. In this case, on a 15 minutes time frame, I love to analyze on a 15 minutes time frame when I'm looking for entry point that are very that have to do with that current the current I don't know where are they. Oh, here they are. At that particular session of the market. So we have this high as our current external high. We have this high as the current external high or external support resistance, sorry. So this is the external not extra external resistance slash high. So this is the currently high that is holding the market intact or inside of it. Then the low that created that external high is this low here. So we are taking it to external current low slash support. So these are the two levels that are currently holding gold inside. Gold is not breaking to the downside, it's not breaking to the upside of those two levels, but it's trading inside of these two levels, and they're very important and very crucial. The fact being, they are the ones that are currently controlling where price will likely to go. Either price will buy or either price will sell. It's when we see these particular areas being broken. And then the second thing that I use, or that I always go for after the external high and the external low, is the internal lows and internal highs. So the first internal low that I'll look for is the one that is, high. The first internal high that I'm gonna look for is the one that have created the external low. So I'll go for this low here. High here, sorry. So this high, this internal high, it's inside of those two levels. This high is the one that have caused the market to shift to the down or to create this external low. So this internal low, this internal high, it's very important in the market, because for price to make all this movement that we see, it was caused by this high. It caused this low to be created, and this low created that high. And we can see that when price comes inside of that level, it shows a restriction or fail. It reacts well on that area, so it becomes the third most important area. So it's the internal high. So it's the internal high slash, at this time it's a resistance because the market is below it. Resistance. Why? Because the market is below it, right? So let me do this. Sorry. I need this to always be in. We have the external high, the external low, and the internal high that has caused this low. Then the one that also is very important is the low that was created by the external high. So which low was created by the external high? It is this low here. So it also becomes a very important area in the market, because it was created after the market did what? After the market formed the external high. So it becomes the internal low slash support, because the market is still trading above it. It becomes a support because the market is still trading above it. So these are the 4 levels that I mark before I take any trade. Before I can say, you know what, I need to buy or I need to sell gold. These are the levels that I mark first, so that they can give me a better idea where price is likely to go. Why are they very important? I said they are very important because they have, or they are part of the external high and the external low. So they were created before or after the external and the external high and the external low. Price formed this high before it created the external low, where price now is already inside of this low and this high, and this high have formed this low. Hence why when price comes inside of that area, you can see that reaction there. look at how price reacts on it. It shows a very huge respect around here and also around here. So it shows you that this low that was created by this external high is very important in the market, and also this high that created this external low is very important in the market, in the sense of when price comes to it, it reacts according to how it's supposed to react, or it forms a reaction. There is a reaction that is being formed, that happens. So they are crucial in that way. So what am I going to be looking for now is this. I want to see price either breaks my external low or my external my internal high or my internal low, sorry. Reason being, if it breaks this level, the next point that price can reach to is this high, because around here there is no anything that can say it will keep price from reaching that high. So this high is the only one that hasn't been tested, or price hasn't mitigated it. That's the reason why I say if it breaks my internal high, I know for sure that price will go for that level. So as you can see, we have missed an entry here because I was still explaining on how you can look for buys or sells. We should have long went in here buying. The first target would be around that area, would be around that internal high or internal resistance. And look at the reaction. Look at how price reacts from that internal low. So these are the levels that are very crucial when you are trading gold. Every time before you take any trade, make sure you have these 4 levels marked, labeled in your chart. And when they are labeled, you have an idea of where price will likely to go or how price will likely to react. I've shown you so many times when price came to this high, look at the reactions. Look at the reactions. Every time when it taps on this high, there has to be a reaction to the downside. Until and unless price breaks that level, that's when I can say take a buy targeting that high. But as much as price will keep on rejecting from buying from that area, I'll keep on selling it, hoping to see it coming to this or to this low. Then look at how price also reacts on this low. Every time when price comes to it, there's a reaction. Look at that reaction. Then a breaker, a retest, reaction again to the downside. You see? So it shows you these 2 levels, the internal high and the internal low, that are very crucial and very important in the market. As much as the external high and the external low are very important, as you can see the reactions on them, you also have to pay attention to the internal high and internal low, or internal resistance and internal support, because they also have a crucial play that they bring in the market. They either reject price from buying or either reject price from selling. The internal high and the internal low, the resistance and the support. So you need to pay also attention to that. And when let's scale to a lower time frame and see how price even reacts to those levels. On a 5 minutes time frame, you can also see. And the one thing that again is giving me good vibes is that we can see a compression forming around here. So I always tell my student that whenever I see a compression or price doing this formation, I'm propelled to buy my market. I'm always propelled to buy my market. So let's see if we won't be taking a buy. If it hits around that level, I'll be buying it from here. I'll be buying it from here, from the midpoint. Yeah. Oh, this is a reaction. Let's take a buy there. Another one. So the reason why I'm buying, price has tapped on my level of interest. So I'm looking to see it coming to that level. So your stop loss has to be below there. And you might also extend it to that high, because we might see it breaking that level and heading to the upside. And we are inside. We have bought. Let's see how it reacts from that level. Let's see how it reacts from that level. Let's see. Already inside. So first take profit has to be here. Then the second take profit can be above that high. So these are the two take profit that we will be placing. We have already analyzed top-down analysis, and we have entered on our levels. And now price is reacting according to how we thought or we hoped it will react. Look at that. We are already running in profits, $13 profit, which is a good move. It's a sniper entry. Entered, price, it's reacting according to how we wanted it to react. So let's see if it can't keep on moving from there to the upside as we think. Like I said, the first TP is on this internal high. Then the second one will be above that level. So I'm teaching you how to trade gold live, and I'm also showing you how you can use these levels. As much as you need to know the direction of the market, you also need to see how to enter. So that being said, you can just your stop loss, you can just lock it, but let's allow it to move a little bit before we lock it, because yesterday we have been locking it and we saw price doing what? It kept on coming back to our stop loss, hitting our stop loss, and that was just something else. But I might be wrong, I might be right. The good part is understanding your strategy and having no fear to take a trade from your levels of interest. Some, they know how to analyze the market, but the funny part is they are afraid to even take a trade at their interest point, or at the levels that they call interest levels. My wife, can you switch off the AC for me, please? So we want to see how price will react from that level. We want to see how price will react. We want to see how price will react. We have to see a reaction, a very quick reaction. Price has to pay, or the market has to pay. We don't know. We don't know. Remember, this account was $11, and now we are holding profits $12. So let's see. Like I said before, these levels are very crucial. I've seen them pushing price so many times, and hence why I'm very positive when I take trades from those levels, because so many times they've been confirming my entries. They've been giving me entries, accurate entries, and hence why I have a positive idea that we might see it buying. There are so many rejections, so that let's just lock our trades just above here. We have locked there. We can't lock it now. This is where we'll be logging our trades. That's where we'll be logging our trades. So we just need a little bit push of a push to the upside. We want to see price pushing to the upside. Then we'll be able to lock our trades. We want to see a push, another push. Let it keep pushing. Because if I had locked them, if I had locked my profits there, we could have been taken out now, because it came back to our entry level, our entry point. So yeah, now I can lock my trades, and I've locked my trades. Let's see how it will react. We have locked them. So if it hits our stop loss, we are going out with $4. But if it goes to our take profit, then we'll be going out with something huge, something a little bit huge. Yeah, we are currently holding $21. A quick scalp on gold. Another candle just formed. I want to see it pushing again to the upside. Pushing to the upside. Any comments? I don't see anyone commenting. Have you taken the trade? I've given you an entry point, a level of entry point. Are you with me in this trade or not? $11, and now we are holding $17. The initial balance is $11, and the profit that we are holding now $17 from $11. So we have doubled the account, and we are hoping to even gain more profits from that. Let's do this. China, we are here learning. Awesome. Let's keep learning. So this one, it will be giving me $44. If it goes to my TP, this one will be giving me $14. So let's add more of the TP. It keeps on coming back. I don't want to see it coming back. But we have locked our profits. So if it keeps on coming back, it will eventually take us out with some profits. $4, a $4 profit, which is something. So on a 15 minutes time frame, let's see, we saw if this was our stop loss was hit. You have secured a $4 profit. So yeah, let's see if maybe it wants to come back to that level again, and if it does, we'll look for entry point. If it taps on it again, that's where we'll be taking other entries. Yeah, the best thing is to have patience. When you're trading, you just need to have patience. Price, you don't need to chase price, but you let price decide what it wants to do. I want to see just a little bit. Let it come to that level again. Let it come and tap there again. Another tap. Just another tap, then reduce your volume. Another tap, then we go in again. Come on, a little bit. It didn't tap the way I wanted to tap. Let's go to 5 minutes. Let's see. Come and tap again. Come and tap again. Come and tap again. So there is high possibility that price will also visit this little low here. It might mitigate. Why is it leaving us? Why is it leaving us? Come and tap. Yeah, we need to have patience now. We have to have patience. This candlestick will be closing just in 3 minutes and 30 seconds. And then 1 minute. Just another tap. I'm just looking for another tap on that level. Another tap on that level. Another tip, another tip. Patience, 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 patience. I'm just patiently waiting. Patiently waiting. Patiently waiting. It's closing in 9 seconds, 7 seconds, 6, 5, 4, 3, 2, 1. Another candlestick has formed. Let's see that one, how it reacts. If it taps again on my level, I'm going in. And also if it closes above here, I'll be taking a buy. I'll be taking a buy. Yeah, gold requires patience. Let's wait and see. It's leaving. It's leaving us. It's leaving us. But you can see why I said these levels are very crucial. They price reacts when it comes to those levels. So you just need to understand what you are doing and how price reacts to that certain thing that you are doing. Understand your strategy and trust your strategy. Trust your strategy. Trust your strategy. On the 30 minutes, we can see that a nice reaction. A nice reaction. I'm tempted to go in, but price hasn't really given me. That will be if it closes above there, the next candle that comes in, I'll be going in. The next candlestick. And look at that. 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 and it has left us. Yeah, that's gold. That's gold. That's gold. Look at that. That's some nice reaction there. That's a nice reaction. That's a nice reaction. That's a nice reaction. So I wanted to see it coming to my level, but it didn't hit the level that I wanted to re-enter from. And now it just boom went up. So this is the third touch. We might see it coming. If it just taps around here, I'll just enter from there. Just here, just here, just here. Come down. Come down, come down. Don't leave us. So we had a very, very good entry, and because of a small account, we had to lock it. We have to lock our profits, and gold came and took us out where we had locked our profits. And yeah, come a little bit down, just a little bit, just a little bit. What's happening? What's happening? It just jumped. Sorry, I had my network just jammed, so I'm just restarting the chat. So it's currently loading. I'm sorry for that. I don't know why that happened. I'm sorry for that. I'm currently restarting it. It had jammed. I don't know what's happening. Yeah, it left us. It has left us. It has left us. It has left us. It has left us. But you can see that that was just a pure entry. That was a nice entry that we had. And gold left us. Let's see. That candlestick will be closing in a minute and some seconds. In a minute and some seconds. A minute and some seconds. A breakout, a retest, and prices. It's going. Wow. That's some huge movements there. Now let's see how it will be reacting from that level. Breakout and a retest. Breakout, retest. We had a perfect entry around that level, but price had to take us out, and it went. So that's another entry there. But I don't advise people to take resistance. So we might see it dropping again a little bit or breaking that level. We might see it breaking that level or even retracing from that point. So the entry that we took at first was a sniper entry, was a perfect entry. If we could have not if we didn't lock our profits, we could be swimming in deep profits by now. We could be swimming in deep profits, but we don't regret what we did because we are trading a small account. So the idea is not to blow your account, but rather to maintain it. Make sure that you have an account. I'm just showing you how to trade a small account. So the idea is not to lose your account, but rather to what? To maintain that account. So if that candlestick's close bearish, I'll be selling it. I'll be entering some sales, scalping it to the downside. Yeah, we might see price. We might see price from here again to the downside. We might see that happening again. So there's a 5 minutes time frame now. We are in a 5 minutes time frame. let's see the 1 minute time frame. It keeps on failing to buy from that level, so we might see a drop. We might see a drop. We might see a drop. Let's see how that candlestick closes. It is closed below. So from here, I'm selling it. Hey, my network. I wanted to sell it from there. Look at where it has entered. That wasn't the idea. I wanted to sell just from where it was. And it just loaded, and now we just need to close it. It's a very risky trade. Yeah, let's close it in profit, because I just wanted to sell it from here and it didn't. It just entered somewhere else. I don't know if it's network or is Xauusd doing some things that are not. But it is what it is. Maybe it's my network. So we want to see again a retest back from here. If it fails to continue buying from there, it might come down to that level. But anyway, I think this is it from me. Keep on observing how it reacts and how it will be behaving from that level. I'll be going offline now. I'm done with my life. I have shown you what to look for and how to do it. So see you again next week as we'll be doing the live analysis again. Bye bye.